Mortgage refinance demand dropped 62% year over year. Could this mean that the housing market is about to shift? Hey, what is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and in today's video, we're going to watch a short video clip here from CNBC where they talk about what is going on in the mortgage industry. Now, if you are new to the channel and you like all things finance, real estate, and investing, consider liking and subscribing, and let's get right to it.
Rising interest rates are hitting mortgage demand hard, so now the Mortgage Bankers Association is lowering its forecast for 2022 originations. I'll get to that in a minute, but first, the weekly numbers. The average rate on the 30-year fixed mortgages with conforming balances increased to 5.13% last week from 4.90 for loans with 20% down. That is 186 basis points higher than where it was just a year ago. Back then, it was at 3.27%. And as a result, refinance demand fell another 5% for the week and was 62% lower than the same week 1 year ago. Applications for a mortgage to buy a home did squeeze out a 1% gain for the week, but still down 6% from a year ago. Interesting to note, though, a big jump in applications for adjustable rate mortgages from home buyers. They, of course, carry a lower interest rate, and they made up over 7% of applications, and that's the highest level since the summer of 2019.
Okay, so there's obviously a lot to unpack here, but the main takeaway is that mortgage interest rates have gone up pretty dramatically from the beginning of the year. They're hovering on average at about 5% today. Now, that is obviously going to slow down refinance applications because you have to have a benefit in order to refinance. In other words, if your interest rate is at, let's say, 3% today and you want to refinance to lower your monthly payment, well, you're not going to be able to do that by taking a higher interest rate. Now, in addition to that, they're saying that the mortgage applications for adjustable rate mortgages are up 7.4%. That is something that actually concerns me just a little bit because adjustable rate mortgages had actually caused a lot of issues in the great financial crisis back in 07 and 08. Now, that is a relatively small segment of the market, and for certain people, adjustable rate mortgages may work really well. An example would be somebody who has a really big equity position. Maybe they only owe 50% of what the home is valued at, or maybe they know with a high level of certainty that they're going to sell in a few years. So taking a 7-year adjustable rate mortgage or a 10-year ARM is probably going to be relatively safe. But again, personal finance is personal, so they have to make that decision for themselves.
Since rates are rising faster than expected and the Fed is moving more aggressively to curb inflation, the MBA is now forecasting mortgage originations to total $2.58 trillion in 2022, a 35.5% decline from last year and down from a previous forecast of $2.61 trillion. Purchase originations are still forecast to increase to a record $1.72 trillion this year, but down from a previous forecast of $1.77 trillion. Refis now expected to fall 64% to $841 billion.
All right, so that is going to wrap it up for the short video clip there. A couple things that I found really interesting. They revised down their mortgage origination projections by about 35%. They are now estimating there's going to be about $2.58 trillion in mortgage origination volume for the year. If you look back at historical data, $2.58 trillion is actually still a really big number. But one thing I'm interested in is how about the unit count? So how many mortgages make up that $2.58 trillion? And is that number up or down from last year? I have a sneaky suspicion that actual mortgages are going to be down slightly because we've seen a rise in prices, and as a result of the higher prices, we've seen higher loan amounts. But as a whole, even with the reduction in mortgage applications, even with the revised down projections in mortgage origination volume, it is still projected to be a really large year. So that is telling me that even though the housing market might be starting to shift a little bit here, overall, there is still a huge buyer demand out there. We just have a very low amount of inventory. So I think for things to really shift, or for us to see a pullback in actual housing prices, that is anything substantial anyway, I think it's going to take a lot more supply to come online, or maybe, dramatically higher interest rates from where they are today. I mean, if we're sitting at about 5% with the 30-year fix today, historically speaking, that's still a very, very low interest rate. Anyway, that's all that I have for you here today. Hope you found the information useful. If you haven't done so, consider liking, subscribing, and we'll see you on the next video. Take care.